China just made a bold move that could completely flip the script on the US dollar, and it's going to change everything. Ever wondered what would happen if the US dollar lost its status as the world's leading currency? Today, we're diving into a major shift in the global economy as China makes a bold move that could shake things up. We'll explore how China is pushing the yuan to challenge the dollar's dominance and what this means for global trade. Plus, we'll discuss why gold is regaining importance, with central banks buying it in large quantities. After examining the latest news and expert insights, we'll explain how China's aggressive strategy could serve as a wake-up call for the US, potentially changing our perspective on money and trade. Let's dive into a compelling topic that's been making waves in the financial world: the decline of the dollar's dominance and the growing importance of gold. The US dollar has long held the top spot in international trade, but recent trends indicate that things are changing. Countries, especially China, are beginning to explore alternatives. So what is de-dollarization? In simple terms, it's the process of reducing reliance on the US dollar in global trade and finance. Historically, the dollar has been the heavyweight, accounting for around 88.5% of all foreign exchange transactions as of 2022. However, in recent years, a shift has been happening, with China leading the charge by promoting the yuan for more international transactions. Back in 2010, only 1% of China's cross-border payments were settled in yuan. By March 2024, that figure had jumped to over 52.9%. This is a massive increase in just over a decade, and countries like Brazil and Argentina have begun accepting yuan for trade, which is significant for China's global goals. China's push to decrease its dependence on the US dollar in trade and finance is driven by geopolitical tensions, economic sanctions, and a desire for greater financial autonomy. Recently, China has entered into new trade agreements with countries like Brazil, Russia, and ASEAN members, prioritizing the use of local currencies instead of the US dollar. The Chinese government is actively promoting the yuan as a global currency. The People's Bank of China, PBOC, has reported a rise in yuan-denominated transactions, particularly in energy markets. This includes deals with oil-exporting countries to accept yuan for oil payments, further strengthening the yuan's position in global trade. China's digital yuan, ECNY, is picking up speed. In 2024, pilot programs for international transactions were launched, allowing foreign businesses to settle trades in digital yuan. This move is part of China's broader strategy to make the yuan more attractive and widely used on a global scale. Additionally, China is strengthening the offshore renminbi market, especially in Hong Kong, which handles a significant volume of yuan-denominated transactions. To draw in international investors, they are introducing more products like yuan-denominated stocks and bonds. In early 2024, China made a major move by selling around $53.3 billion in US Treasuries, marking its largest single sell-off. This trend continued, with China reducing its US Treasury holdings by $227 billion in February 2024 alone, bringing their total holdings down to about $775 billion. This sell-off is largely a reaction to escalating tensions with the US, including trade conflicts and sanctions. By reducing its US Treasury holdings, China is looking to minimize risks associated with US economic policies and potential sanctions. China's gold reserves have also seen significant growth, reaching 2,264.50 tons, a key milestone for the country. This boost in reserves was like securing a VIP spot in the global currency arena. However, the journey hasn't been entirely smooth. China encountered a crisis between 2015 and 2016 when speculators began betting against the yuan due to fears of an economic slowdown. The People's Bank of China had to intervene, using their reserves to stabilize the yuan. While this intervention was critical, it also underscored the difficulties in promoting the yuan on a global scale. After that crisis, China adjusted its approach. Rather than aggressively pushing for full de-dollarization, they started focusing on building systems that allow businesses to settle trades in yuan. This involved creating offshore yuan clearing centers and expanding currency swap agreements with other nations. It's like constructing a bridge to make it easier for others to adopt the yuan. However, to maintain financial stability, China also tightened capital controls. This move was a double-edged sword. It protected the economy, but made some foreign investors cautious. Striking the right balance is something China is still working on. Now let's turn to the US dollar. It's been the dominant currency for a long time, but the landscape is shifting. In 2022, the dollar accounted for about 88.5% of foreign exchange transactions, with the euro and yen trailing behind at 30.5% and 16.7%, respectively. What's interesting, though, is the rise of the yuan. While the dollar's share has slightly increased since 2010, the yuan has been the fastest-growing currency, now making up around 7% of transactions. This indicates that while the dollar remains dominant, the yuan is steadily gaining traction, particularly in trade involving China and its allies. Another crucial point is how the US dollar has been leveraged as a tool for sanctions. The US has used its currency's influence to apply pressure on countries like Iran and Russia, prompting many nations to seek alternatives. This is where China's yuan comes into play as a viable option. As more countries look to reduce their reliance on the dollar, the yuan is emerging as a favored choice for international trade. And speaking of alternatives, gold is making a strong comeback. In 2024, central banks worldwide significantly increased their gold purchases, grabbing a record 483 tons in just the first half of the year. Gold has always been considered a safe asset, especially in uncertain economic times, and its appeal is growing with rising inflation and global tensions. In 2022, central banks bought an impressive 1,136 tons of gold, with Turkey, India, and China leading the charge. Turkey alone acquired about 400 tons. This trend indicates that many countries are diversifying their assets and trying to reduce their reliance on the US dollar. A recent survey even found that around 60% of central banks plan to continue adding to their gold reserves in the coming years, signaling a strong desire to safeguard their financial stability. When it comes to gold prices, they started 2024 at around $1,940 per ounce. But as concerns about inflation and global tensions grew, prices surged to about $2,000 per ounce by mid-2024. This rise underscores gold's reputation as a safe haven, especially as the dollar faces challenges and the yuan gains momentum. Investors are flocking to gold not just for its historical value, but also as a hedge against currency fluctuations. With the yuan on the rise, gold is becoming an increasingly attractive option for both central banks and everyday investors looking for stability. So what does this mean for the future of global trade? While the dollar might not lose its dominant position anytime soon, the rise of the yuan and the increasing importance of gold are certainly shaking things up. China is making a strong push for the yuan to be used more widely in cross-border transactions, building the necessary infrastructure to support this shift. They're establishing yuan clearing banks in major financial centers and expanding currency swap agreements. It's like they're laying the groundwork for a new system that's ready to take off. However, there are challenges ahead, such as China's capital controls and how the People's Bank of China manages the yuan. Investors need to feel secure, and any signs of instability could make them hesitant to fully embrace these changes. In the end, the shifts we're seeing in global finance are pretty thrilling. The growing influence of the yuan and the resurgence of gold are major developments that could reshape international trade. As countries explore alternatives to the dollar, the financial landscape is evolving, with central banks diversifying their reserves and leaning towards safe haven assets. The effects on global trade could be significant. It's clear that the financial world is undergoing change, and both the yuan and gold are playing key roles. While the dollar remains the dominant force, China's moves suggest we're entering a new era in global finance. What do you think about the yuan's growing influence and the shifting dynamics in global finance? We'd love to hear your thoughts and perspectives in the comments below. And if you haven't already, join the Revel Discovery community by hitting that subscribe button. Stay updated on the latest trends and changes in global finance, and explore the evolving world of international trade and economics.